Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 11th of April, Thursday. Today, we got PPI numbers, and they are pretty damn good. As you know, PPI, yesterday we got CPI, and everything was destroyed, everything was red, and that's from the consumer standpoint. But from the producer standpoint, PPI is also a leading indicator of further easing on inflation. And I think that's why with these good numbers from today, a lot of analysts are seeing the light at the end of the tunnel and inflation progressing to the downside in the upcoming months, despite yesterday. But there are certain technical indicators and there are certain data and information that we can gather that may sound not as optimistic. But let's first revise the raw data. The raw data basically is that PPI month over month for March decreased from 0.6 previous one to 0.2. Expectations were 0.3, and we demolished the previous data and also the consensus. This is a really good number. And month over month in core PPI also decreased from the 0.3% to 0.2% as expected. So this is also a check. In terms of year over year, we have the core PPI increasing a bit. The expectations was that it was going to increase also again. So this is a fairly, this is a double-edged sword. But on the year over year for the headline PPI, we got also an increase, but at the same time, we were also expecting an increase higher because at the same time, yesterday we got the CPI higher. So some parts of the PPI are still showing that lagging inflation trend lower. So this is too good and too bad. So what else can we have? On the PPI, excluding food, energy, and trade, this is a little bit of increase, but month over month, we are seeing a downtrend also, 0.3 to 0.2, and year over year, basically, we are increasing a bit. So mixed sentiment on everything, but the big thing is that month over month on March, we got a big decrease. Now, let's see what analysts expect in terms of interest rate cuts. So there's no change. Yesterday, we got a really bad CPI, and I think that fundamentally changed the rules of the market for the upcoming weeks, even months. And we can see that what was before an interest rate cut here, it moved to a no cut. So basically, we have these probabilities for not a rate cut in June, not a rate cut in July, and the first cut with 45% of probability. Look at all these scattered probabilities. So 30, 21. I mean, that's not too confident. The first cut may come in September. But look at this because this is really damn interesting. September and November, there's the same rate. So no cuts in November, and the final cut, it's 34% probability, so either a cut or not. So basically, two rate cuts are on the table. And this is not aligned with how the market is behaving today. We got decent PPI month over month, but there are still numbers. For example, I think the worst one is the PPI core year over year from 2.1 to 2.4, and I think that's pretty bad. So let's go now to the technical analysis to see how the market is behaving, because it's super interesting. Yesterday we got all this chop, so let's ignore that, sorry, and let's focus on the pre-market action. Look at all this liquidity, this consolidation, and this the move lower. So this is basic manipulation during overnight. I trade during overnight most of the times, and I know that this is coming down for sure. That's why my first trade was down here. I was watching this liquidity and this liquidity. And at the same time, look at all this money. With the same reasoning that here we were building liquidity and we got rid of everything. At the same time, we are at this part coming into the PPI data at 8:30. So I took the trade, trading this liquidity, and I thought initially that I was in a good trade because that was the move, no fair value gap, still another move, and then we got the fair value gap. So I traded as always the fair value gap, entry there, the stop loss is right below the fair value gap at this week. I don't need to put the stop down here because here the trade is already invalidated. And my target was basically this liquidity, all this liquidity up here. Big setup, but I got stopped out because they manipulated to the second liquidity down here. So I got, again, sorry, I got stopped out for 8 points loss, 160 down. And I was waiting because I didn't like this kind of move. I usually trade liquidations and liquidities on a fair value gap or even an inverse. This was a good setup. It didn't work, but that sometimes happens. But this second one, I was waiting for this kind of thing, for the first retest and then the final manipulation lower. This opened a fair value gap here, pretty damn interesting, and I took the same. Entry, stop, this was maybe even lower quality, 15 points for a 1.53. It's not my best setup, that should be here. So my target was basically all this liquidity that we were at some point, we are going to run all these people. All these people is going to get run, either on manipulation move and continuation, if the numbers are good, or manipulation move into the downside like we saw yesterday here. This was manipulation into a big rug. So another loss. And this is 300 bucks plus 160, 460. My max loss for the day is between 500 and 600. And I mean, I was just really frustrated with this. But then I waited for the PPI. I waited for the PPI and I thought, okay, let's now see the data and choose one of these two pivots, either this one or this one. Obviously, this one offers less risk-reward ratio, and I already picked this pivot for a 56 point trade. I don't usually do this, but when I saw the numbers on the month over month, I just put a trading here. I put the stop down there, and I saw, okay, I think this is good numbers. Let's trade for all this liquidity run. I didn't expect to continue higher, but I was pretty sure that if they wanted to basically gather all these people, all this liquidity, and then move lower because the numbers were bad, that would make a possibility. That's why my target was basically this pivot on this liquidity from yesterday. That included all these people. So the overnight traders short were destroyed. I bought the reversal, and my target was this one. So basically 500 minus 19 point, that is almost 2000. It's basically 1500 bucks, 1500. And I was not lucky, but the trade went well. I was thinking, I was confident that all these people were going to get destroyed either by a manipulation or continuation. So now let's talk about what happened later on, because we are now squeezing all the shorts from yesterday. This is not a normal move. This is not the kind of move that, I mean, the numbers are mixed. Month over month are quite good, but I don't see markets skyrocketing like this. Why? Because I think fundamentally yesterday's CPI, it's pretty bad. PPI it's an important data, don't get me wrong, but CPI is headline inflation affecting the Fed. The Fed is not watching the PPI, is watching the PCE. And as we saw earlier on the Fed Watch tool, there's no change. So the market is pricing in what? An ease of inflation based on PPI? I don't trust this. Excuse me, I don't trust that. So let's talk about technical analysis, because yesterday's range, all this range, ended up the holding pocket right here. And I think this is just a squeeze of all these shorts that were basically from yesterday's CPI. This kind of manipulation is, look at this, consolidation, and then look at this. This market is super volatile. And you don't want to be in the other side of the trade, because they are going to get rid of you like this. This is a squeeze. And a squeeze based on what? On Nvda, earnings. Look at Nvda pushing the market. On Google earnings. On Amazon, with reaching all-time highs. Meta doing its thing. Apple is 2.55%. Look at this. So Apple, Nvidia, and the AI, it's basically pushing the markets to and squeezing the shorts from yesterday. But fundamentally, nothing has changed. So it's your decision to trade this or not. I don't think this is a safe trade, so I don't want to chase this right now. We are approaching this maximum pain that is up here. There's a lot of liquidity up here. If we reach this liquidity, that would be insane for a PPI number. You never know, but I prefer to wait and be done for the day. And tomorrow, Friday, let's see how we closed today. We need, in my opinion, we need to finish above this line, and if possible above this. So between in this range, I'm okay. So we can pull back, we can then consolidate a bit, do some stuff, and then consolidate up here. We are 121 on the Nasdaq and 0.60 on the S&P. There's a lagger. The S&P is lagging behind. Look at this, it's not even higher from yesterday, because the Russell, it's pulling back. All the banks are pretty mixed, and tomorrow we start seeing JPM and other banks reporting earnings. Dollar, it's super bullish. And I think this is not good. Yields are mixed, but are still holding levels. So the situation from yesterday didn't change. The only thing that we got is pretty decent PPI month over month, and then Apple and other Nasdaq stocks really pushing the FOMO. That's my opinion. And I think the market sentiment has not changed. We are just squeezing yesterday's, and at the end of the day, we need to see closures, we need to see daily closes, we need to see daily setups, and on higher time frames, we are just chopping. We didn't push lower. We are still inside this candle that is inside this huge sell-off. So the trend is basically still lower. It's still lower. So I would be waiting for a rejection basically around here. Don't trade this setup. Don't lose to FOMO. Obviously, Apple, Nvidia, Meta, Google can push the market, but fundamentally, this market is showing you the same as yesterday. We were expecting a pullback. This is more than a pullback due to some news and some data, economic data. But in my opinion, fundamentally, there's no big change to the grand scheme of things and the big picture. That is, Fed is now going to cut 3 rates, maybe not even 2, maybe 1. And we are just talking about earnings. And it's your decision to really see if this setup it works for you. And I will just wait for my levels to reach. That is, let me explain again. This level needs to hold as previous liquidity. This level, it's the maximum pain for today. So I would like for Nasdaq to really hold up here, because maybe tomorrow we can attack this liquidity up here and then cover this pivot, and we can start progressing to the upside with maybe some kind of moves like this. But I think this setup for me, with this fair value gap that is now being formed, so something like this would be great. This kind of setup is what we will be watching for tomorrow, Friday, capital reservation day. And that's all. I guess today's super bullish due to Apple destroying and squeezing the shorts, but dollar yields and the estimates from analysts for the interest rate cut have not changed. Banks are pretty damn weak. Tomorrow we are starting earnings. S&P is a lagger. I don't know, guys, but I need more from the market to really be confident of taking longs in a trend day like this. Today I was not confident it worked, but I'm not going to chase this move. I will wait for tomorrow and play this setup that is right here. So that's my forecast and my structure for tomorrow. And that's how you should trade. Not losing to FOMO, not chasing price action based on you have to base your setups and your trades in your levels, in your experience, in your strategy, managing your risk. And up here, there's no way you can manage your risk. You are just chasing as for the 80% of traders that are not profitable. So think twice and be smart. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Look at the screen and let me know if you agree with this analysis and if you share my approach in this setup. I think this setup for tomorrow is better than chasing today's price action. So it's your choice. Let me know in the comments down below if you have any other setup and your reasoning. I will be pretty appreciated. So remember that discipline and risk management are key for success. Stay safe, everyone, and see you tomorrow, Friday, Capital Reservation Day. Take care.